Boom, boom.
Oh, I don't know. I didn't do it on purpose.
It's growing on you. The virus is spreading.
Well, I'm sorry to anyone who I just pumped.
Still can't believe that was his catchphrase for like literally years,
Was?
for the entire bull market. You remember Pomp? His whole thing was the virus is spreading. It was that and
Oh,
long Bitcoin, short the bankers. Remember?
not really.
Oh, you clearly didn't follow Pomp closely enough. I think that says more about me than it does about you.
Oh man, where's my weekly open Twitter account? I think I'm logged out. Well, we're just going to tweet it from my personal. Now for weekly open with Cred.
Old school style. Just me and
Presented
you.
by FTX app. That's right. Just me and you. Don is back on vacation after.
Don is too good for us. We know this, right? Like
Yeah.
the way he traded this, he won't associate with plebs like us anymore, Ledger.
Yeah.
I think it was good while it lasted, but
Still
he's
on
clearly
full screen. It's
ascended.
embarrassing. Yeah, so the last couple of weeks he was like, oh, I decided to come back. Has nothing to do with the market actually being fun or doing anything. Just, happens to be, I'm going to make time for you guys. And now we have one red candle and he's like, back on vacation.
Yeah, I know. His timing is really stellar. And the volatility picked up as soon as he came back to like manage some positions, whatever. So yeah, good for him. Good for him. It's funny how that's like a multi-year indicator now. The amount of like hate Don gets in his very clear, unambiguous directional tweets. Like there's some real signal there, and the fact that that's the case since like 2018 is pretty crazy. But how are you doing? What's new?
I'm doing well, but I'm going to start the show.
Let's do it.
We technically didn't start it, but I'm going to start it right now. So here we go. 3, 2, 1. Hello and welcome to Weekly Open. I'm Brian here with Cred. It's just the two of us today. Don is out, as we were saying in the pre-show. You may or may not be have just listened to that. Depends on how lazy we are on the clip. But nevertheless, we're happy to be here. We're happy to be here with you. We're happy to be presented by FTX and the FTX app. Go to weekly.com/FTX. You can trade there today directly from one asset to the other. Track your portfolio, as you've known and loved since 2014. You can do a lot more now. They even have stocks on FTX now. Check it all out at weeklyopen.com/FTX. Cred, how's it going, buddy?
I'm doing well. It was so hot here for the last couple of days. I know this is just like a completely tired Euro talking point, but it was really hot, and I'm visiting.
It's hot. We don't have air conditioning.
Seriously, like my normal place does, but I'm visiting my parents, and this place doesn't. And if you want to know just how hot I was yesterday, I actually took a short-term trade on ETHUSD and made like 2%. Like, can you imagine how much the weather has to affect my mental state for me to start short-term trading? Like the long side, no less. Like I basically bought weekly resistance. That's how hot I was, and got away with it. But yeah, pretty good overall.
I like the subtle flex of generational improvement there too. Like I have air conditioning, but my parents, no, they do not.
Oh yeah. Well, you know how it is. How are you doing? What's new in Ledger Town?
I'm doing well. I've got kind of a lot going on this week, but that's a good thing, not a bad thing. I'm, as literally everyone is, looking at like the first kind of 1 or 2 days of red after quite a bit of green candles. And I'm like, oh no, am I supposed to panic sell now, or is there strength in this market? I don't know what's going on. So I'm hoping that you'll tell me so that I know. Should I buy more?
Someone to blame.
Should I sell? Can I blame Cred in a week or two if we just turbo nuke? He told me to buy ETH on Weekly Open.
Well, yeah, I'll happily shoulder all your losses. And obviously, if you win, it's your doing. But if you lose, I get the bill for it, right? That's right. That's how it works.
So was the basis of your trade a like kind of a week candle positioning, or
oh my god, no, it was just an hourly level that I bought. Yeah, it was like an hourly candlestick make boing, and I was like, oh, this is fun, and then I stopped.
To say, did it boing?
It boinged. Sometimes you get like really itchy fingers once you start short-term trading again after not doing it for a while. And I was like, ooh, that's the 2018, 2019 degenerate in me, like trying to claw out. And I'm like, no, go back where you came from. Like, I don't want you in my life anymore. So yeah, it was just a very short-term trade on ETH USD perps, but nothing to write home about. You've got a scary-looking chart there, I must say.
I do. So we can start just on weekly ETH USD because I think the levels are a little cleaner. If you just look at the red line that the current price is indicating, it's right at the 20-week. If you're a moving average person, it's right at a really strict horizontal that we danced with as resistance, then as support, and then broke through. And now we're back here. So we're smack dab in the middle of the big yellow rangy box that I gave much more latitude than you and Don. I believe y'all's looks, somewhere more like reasonably tight like that.
Yeah, something like that.
But basically, it's all the same because it's, hey, can we actually push past round number 2,000? And if we can, maybe 2,500 or more is in the cards, which once again, round numbers having an impact because above that, it's 3,500. It's 1, 2, 3, 4, 5, 6 green candles in a row on the weekly chart after bottoming a few weeks before that. That's pretty constructive, but we should not be surprised by some downside here. It doesn't mean new lows immediately or anything like that. It's just a reasonable person would look at this and say, oh, maybe I'll take some risk off. And then yet I say, I am just as deployed as I was when I was begging for this kind of price to save my skin. So, Cred, what should I be thinking here? Is it a reason to take some off, or is it just something that you have to monitor and see what happens next?
I think in crypto in general, with moves like these, we assume that we'll have the luxury of monitoring and getting a good exit. But normally what happens is you don't exit when you know, quote unquote, you should. It moves very aggressively. And then you're like, oh, well, I missed a really good exit. So now it's going to bounce having moved.
And I'll wait.
And then it goes down a lot more. And then suddenly you've kind of given back half your P&L and the market's in the middle of nowhere and you don't know what to do. I find in general, if you have a decent system and you find yourself wrestling with the question of should I take profit where I said I would take profit in advance, the answer is you should do it, right? You should always adhere to the past version of you that was much more objective, much less emotional, had better data, and set out the plan for you to follow in the absence of really, really strong reasons of not following the original plan, like new information or something that would materially affect the trade thesis, whatever it may be. But in general, the whole point of a trading plan is to trust your past self more than your present self when you don't have all the P&L stuff flashing in your face. I think I agree. Structurally, this is high time frame resistance. It got here in a very vertical fashion, and it didn't really build a ton of structure on the way up. Looking at the weekly chart, right? It's not like we had any consolidations or ranges or carve anything out. It was just a straight retrace of a lot of the one-sided selling we had on the way down. Typically, those types of moves we have, those pockets fill just as easily on the way up, but it's not an infinite, not an endless stream. So I can screen share pretty quickly as well.
Yeah, you know what we should do though before you do, because you won't screen share this, is we should throw some fibs on here to see
that's spicy.
To what degree have we retraced. And if you go from the dead cat bounce in March to the Pico bottom, we're not even really at the 50% retrace since I'm in log here. It looks like a 50% retrace, but the 0.618 would even be higher, at that 2,500 level. I know that's not something that you care as much about, but I like to look at it because I think that's another thing that people might include in their profit-taking choices.
I like to eyeball a good fib.
Yeah.
I'm not against it. But yeah, can you see the chart on?
Yep. Got it.
So basically, in terms of levels, you and I discussed where it kind of comes from, and I think 2K-ish is again round number, but also structurally.
It just fits so perfect.
It's perfect, isn't it? It's this highest close candle here. Previous
trading is easy.
Yeah, I know, right? We had the triple tap. And for me, at least, in terms of weekly bias, this is a close at resistance, right? It's about as close at resistance as it gets. So there's not much I can do from a fresh positioning thing. And to me, this is at resistance. Now, I've got the same level as you in terms of what happens if it blasts through. I think it would end up filling a lot more of this kind of one-sided, unbelievable selling had basically from 3 to sub 1K with no stopping. And for me, it's this kind of pre-breakdown range at 2.5K. Right? And there is some added capture there between those two levels, an extra 30%. But sort of structurally, those are the two levels that matter. And I know you've got the moving average there as well. So I think really if this market's going to drag any higher, I would need to see like daily time frame strength at least to mitigate the idea that we close that weekly resistance. But really, I think it's important to get some context beyond just ETH. We're still in the same tech trade, right? Like tech bounced, specifically S&P, NASDAQ, whatever. We're bouncing alongside it. And ETH is the primary beneficiary of that because it has this extra narrative catalyst or like reason to get long, right? Are we going to get fork coins, people speculating on the merge, whatever else? That doesn't change the core layer of the trade, which is that everything is mean reverting. We're probably still very much correlated. And it just so happened that structurally and narratively, ETH had the perfect storm, if you will, to soak up and suck up all that liquidity that was looking to take risk to ride the bounce in the S&P and in tech in general, right? So I think that context is really important. So the charts I look at on a day-to-day basis, I haven't even been looking at Bitcoin because I don't find it terribly interesting or compelling at this point.
I mean, it's pathetic in relation. Like
it's awful. Like hasn't done anything, right? Spike after spike, no momentum, no anything.
This truly looks like a bearish bounce to me. Like just
on Bitcoin, it's
not interesting. Looks like a classic flag.
I mean, it's just this grindy type of thing, right? And I think in general, these aren't the type of conditions where you should take the whole, okay, and now we rotate and Bitcoin catches up thing, like particularly seriously. In general, in crypto, as you and I know, the stuff that pumps usually, playing catch up unless you've got a really good reason or really good thesis for the rotation is a bad idea, because the stuff that you should have bought, the thing that's strong, you avoid buying the thing that's strong and buy this thing that's weak instead.
Yeah.
You kind of follow that logic, and that's not great, right?
What's interesting is so many people still look at Bitcoin as just the proxy for everything else. Like if Bitcoin's not moving like crazy, nothing's moving. Which I say that, I mean like legacy markets people who look at crypto as some kind of identifier of, is there risk happening in crypto to warn me away from my NASDAQ longs or whatever, and I was listening to a podcast this weekend where they're fairly familiar with crypto, but they were like, man, this crypto industry just can't do anything. Look at Bitcoin. And I was like, well, ETH doubled off the lows and other stuff, it went far more. Like there's a lot more activity here that others are just not seeing because they lump it all together. And I find that interesting as well.
I think it's still a useful base case to have, to use Bitcoin as your crypto risk barometer. I just think because of the merge, we're in very quite specific circumstances and exceptional circumstances in that case. If you look at 24-hour perps volume, ETH is above BTC. If you look at options volume, the open interest on ETH contracts is higher than BTC. If you look at narratively what people are watching and discussing, ETH merge is much more compelling than and closely followed and significant than anything else, which is why I think this is one of those periods where not ignoring Bitcoin, but at least focusing on ETH more makes sense. Also, if you think about how we broke out, ETH led the breakout, right? So for me, at least mentally, I'm at this point where I think we live by ETH and die by ETH. So most of my time is spent looking at the ETH USD chart and then also the S&P and the NASDAQ, right? Those are the three charts I'm looking at: ETH, S&P, NASDAQ. So I still think, we're in that big correlated tech trade. If these boys get smacked, I don't think we're going to be immune from that. And then the second point, because ETH is so basically carrying crypto, I'd rather look at the thing where the speculation is, because that's either going to unwind, get rewarded, get more people to FOMO, whatever it may be, right? So in terms of levels and stuff, as mentioned, if we're going to get continuation through this high time frame resistance, I think it has to be on the back of tech rallying further. It's just, for me, that premise is becoming less attractive by the day / by the week. Because if you look at where a lot of these are from, bring Don back into this in spirit, from the monthly time frame, right? Yeah. If we, for example, fib this thing from candle top to candle bottom, right? You can see that the good old 50, the 50 has already been tapped, right?
Yeah,
from body to body on
nice.
the S&P. And the 618 comes in at 4,400, which also has pretty clear horizontal confluence there as well, right? The point of the last low pre-break, point pre-breakdown, whatever. Now, even if you don't think this thing makes new lows, whatever it may be, if there's going to be any type of resistance, range-bound environment, pullback, slowdown in momentum, whatever terms you want to use, we're pretty damn close, right? It's kind of just like an X marks the spot scenario with the amount of stuff overlapping thereabouts. And I think this will cap our upside in crypto as well if it caps the S&P upside. And I think the NASDAQ's in a pretty similar point as well. With the monthly, the levels are slightly less clear. But if we take the same retracement measurement from candle to candle, bit more space, but fundamentally pretty much the same sort of low to mid 14s where the point of breakdown took place. I'm sure Don would draw something like this cluster here, right? That's another couple of weeks, maybe, especially if they're the same type of magnitude. And then you're talking really high, really important macro resistance across the indices with which we're still correlated. And being long into that, I think would be a rough idea. I don't know what you think of the macro TA.
No, I like it, and it's actually coincides pretty well with daily moving averages. And that's an industry that's definitely looking at those, right? On the S&P, you're like 1.5% from it or something really small. I would be kind of surprised if it didn't just cleanly tap it. It's just the type of thing that market likes to do.
Tap it and then what?
Then we wait and see. I don't know. And
big
then,
week.
Yeah. Same thing with the NASDAQ, except the NASDAQ could manage to go like 4 or 5%. I could definitely imagine if it doesn't reach it, it's a bigger sign of weakness, because you would think many people would wait until it actually taps it to then be like, oh yeah, I'm going to sell, or I'm going to take some off. One of the things I was looking at already, and I still don't think is impossible, is just setting some kind of higher low. Like it's not indicative of, oh, we're guaranteed to new lows, because we did come off in the rest of the world, the stock market, quite strongly, like made a higher high. And I could imagine a world where there's a higher low and people start patterning out stuff, try to assign what kind of patterns or other things might exist there. Just on its face, though, it looks like this market is also at significant resistance just overall in the stock market. And it coincides with the dollar really has been a great hint in terms of what to expect elsewhere. And that breakdown from the parabola is starting to look like awfully bull flaggy to me. Again, just consolidation structure, as you called it, right? Like you're just going back and you're confirming, hey, here's that May level, and here's where we broke out of it again in June, and we went and tapped it, and here we are again looking pretty darn strong. It only took a couple of days to really turn that chart around from extremely weak and looking like it could go back down to 100 to much more uncertain in the sense of it. It really is undetermined about what its next step is going to be.
Have you seen Euro USD, by the way? I've got it up just now in terms of like confluence and stuff, or things that may be similar. This is the daily time frame, and that to me just looks like a nasty failed breakout. Yeah. Right? Like, I don't know, that doesn't look strong to me. I mean, it's just like a failed breakout. Well, what else am I going to call it, right? Yeah. All the other time. I mean, this is like a weekly downtrend. I think about as weekly downtrendy as it gets. It's like the Grim Reaper scythe on that. And then if you look at the patterns developing within the higher time frame downtrend, this is a failed breakout. Just generally continuation in tandem with the trend. So I think dollar strength is still something to take seriously.
Very real.
Because
the reasons for it all still exist exactly the same as they did before.
Yes. That's another thing, right? Like structurally and narratively, it's been so weird to be on Twitter, because on the way down, everyone's saying, well, you can't buy this thing because macro is so bad. It's unprecedentedly bad. We're entering a recession. Everything's going to zero, etc. And then as soon as we get literally the first bounce after 12 weeks of straight selling, it becomes soft landing, no recession. Jerome is a genius. You're sidelined. Cope, seethe. Everyone is in stable coins. I don't know, like rotate.
It's almost like they're talking their bags.
Else. Yeah. So apparently a downtrend is only a downtrend until it bounces for the first time, and then the downtrend ceases to exist.
Now it's a bull market.
Now it's a bull market. Yeah, you only have two options: downtrend or bull market. And if it's going down, it's a downtrend. If it goes up at all, it's a bull market.
Yusko was on some podcasts, and he retweeted it, and it was a video of him claiming victory for calling the bottom or something like that. And I was just like, oh no. And he's like, hey, look, the guy had a chart up, the host did. And then Yusko's like, look, I have the same exact chart. Look at that. It's new high or whatever. And I was like, oh God, we're going back down.
Have you seen how many alts are at like range highs, by the way? Just the amount of altcoins that are in areas of resistance is pretty, it's a lot. So you've got, Solana at Donald's kind of sell spot, the Samani sell program, the range high at 45s. You've got like BNB at weekly resistance, a lot of like Atom and stuff, testing the underside. I think Curve was at its range high. I mean, I was just going through a lot of DeFi 1.0 type of stuff.
Yeah.
And I don't know, this stuff is just at resistance. Like if you eyeball this chart, for example, and you take some indication of where this rally is, a lot of charts look like this.
Can you give me
probably the best example I can think of.
I sold my link. I paper handed it a little bit because I sold it about like 950 or so. So it's basically at that same range high. And I was like, I'm not bag holding this. And I had a good win on it. So I sold it.
You made the top, looks like.
Well, the problem is, then I was like, well, what looks good out there? Let's roll this puppy again,
run it back. Yeah.
So I actually bought Uniswap because it looked like one of the more constructive ones.
Sure. You talked about it last week as well, so I guess that's
consistent. So well, then it immediately started going down. So don't give me too much credit on that link trade.
And that's the thing. I think if you look at a lot of these rallies, like the actual reasonable high time frame pullback levels are not super close, right? The way a lot of these instruments have trended, they've now hit resistance / range high. I don't think it's the best environment for shallow dips on average.
Yeah, and these are very dangerous to me as well, where I'm like, man, the 4-hour chart on that looks fantastic, like ready for continuation. And then you go to the weekly and it's like it's been up 7 weeks in a row in the terrible macro environment. And this is a derivative of a derivative of a derivative asset. So it's like, yeah, sure. I'm not on leverage. Wink.
Wink. Like... yeah, wink. The most American wink ever. Yeah.
Yeah.
So I don't know, like I think if I just give an overview or the stuff that I care about ETH, and for me, I can't long this ETH weekly. First of all, I just don't like chasing. At least I was self-aware. I tweeted like somewhere in here that like I can feel myself becoming complacent or whatever, and that was fair enough. And we also spoke on the show about Bitcoin 200-week reclaim probably being some sort of upside signal. It's been a disappointing one, but at least directionally it's been fine. Like all of that is okay with me, but I can't buy this weekly, nor do I want to. And then if I'm looking at indices, in terms of upside or whatever, there's definitely space for a push. That wouldn't surprise me at all. But as we enter the more kind of headline heavy part of the market, like I don't think structurally a lot has changed to make me think that we're in a new cycle or we're in a new trend, or there's been some sort of massive pivot and a complete repricing of doomer recession versus soft landing versus anything else. I think the market was very oversold. The market got some good data that was, and also I think most importantly, the market just got a break from Fed speak, right? And you put all those few things together, and that's an awesome recipe for a bounce. And the bounce has been great, but I don't take it as strong evidence for a new trend, at least at the moment. Now, it doesn't mean it's not tradable on the long side. There's still awesome opportunities. I'm cognizant that it's up like 130%, and Lido is up much more than that, etc. But my priority, just to kind of add context, is I care about cyclical entries at this point with how I am allocated. I've got a stack which I dabble and poke at short-term trades and whatever else for funsies, but I'm generally looking for like cyclical type of entries. And for me, still, I know I sound like a broken record at this point, but passage of time is very important. And I don't think we've ticked that box or criterion for me yet. But it's very much a trader's market still, a ton of volatility, and it's worth taking advantage of, because I still think also we're due a period of volatility compression, and that's going to be miserable.
Yeah. And where is the high confidence trade, right? Like at a bare minimum, we've kind of disproven that this is a high confidence trade. Unless you get that kind of break of 2000 or ish, and you actually have a chance to enter, and there's some like narrative tailwind to give you confidence that it can get to 2,500. Like that trade is fine.
Yes.
Chopping people up for a week or two first would make a lot of sense for first. And I think my personal next like bigger bet would be, I probably need to cash up a little bit, just in terms of my own positioning, where if I have a bunch of bad trades in a row and then I finally have a couple of big wins and then I get complacent, like, oh, see, I was right all along. Now I'll continue to make money. Like it's a good time to start losing money. Yes. So the best way to not lose money is to get flat. And, nobody ever died getting flat. And I think that what I could see is we make a higher low from here, and it goes as deep as it has to go to shake people out that didn't take any off on the rebound that they were all praying for. And that's where I think I'd be interested in buying again. Like get some medium time frame capitulation that still ends up being basically a higher low, and then essentially look for, can it go retest the same levels with strength? If so, probably sell that again and see if it turns into a chart pattern on a higher time frame. Like if this turns into some kind of daily or weekly compression, to your point about volatility, showing me again, then then maybe we play it. But in the meantime, it looks like it just wants to chop some people up again after several weeks of trending, which, other than some copy bear type stuff, people who are like, nothing's changed, nothing, and they just didn't take the trade. You can say nothing's changed and still take the trade, right? But there was pain on the way up, and now I really think we could just experience quite a bit of pain through chop as people try to stop out, or like don't stop out, or get scared, or whatever, and that might turn into a buying opportunity. I could actually see that going as low as like 13 or 1400 on ETH, and people would really hurt with that. It'd be a perfect retest of the 200-week moving average, though, which we've talked about on this show is a level that I think we could just grind against for quite a while, and that's where we could end up with that volatility compression that we talked about. One other thing that gives me additional confidence there is just how crap Bitcoin's been relative to everything else, and it's a little different. It's not quite so much because ETH has done well. Like ETH has outperformed most of those alts, and ETH of the two majors has much better current narratives. But it always concerns me when a bunch of altcoins do 3x at the same time that like a major does like 30%, in a bear market, because it's reminiscent of 2019. You still here? Oh, you're out. I'm like, I just keep talking, and Cred is in
I'm being
the waiting
censored.
room. You're being censored. I was wondering why you dropped.
No, I was just patiently listening. I agree with you. I think people have forgotten that, again, historically and in general, Bitcoin weakness is bad for crypto. And most of the arguments that have been made, like, oh, well, it's no longer good to use Bitcoin to measure what's going on in crypto, or why would you care about Bitcoin, and all the, the Jeff Dorman Arca type of arguments, right? Like, why would you care about BTC when you've got like Gala, Chili's, and fucking Luna, right? A lot of those arguments age poorly. And at the very least, like, we know that the longevity on trends that don't involve Bitcoin is generally shorter. And this entire breakout is ETH led and part of a large tech trade. And I think, Bitcoin weakness is very much the kind of canary in the coal mine, if that makes sense, as far as the market more broadly, where the best case scenario is that ETH does break resistance and then Bitcoin actually catches up. And then we're in for a conversation where, the market enters a, higher, more bullish kind of trading range, and Bitcoin has a bid, and things kind of chill out a little bit. Like, I don't know if you were watching yesterday, like all the dog coins started mooning. Like it took us 1 week to go from like, oh, merge, very technical ETH narrative, and then the dog coins start mooning. Like, what are we doing here, right? Also, just very quickly in terms of technicals, I don't know if you can see my chart.
Yeah, I got it.
The ETH one. I think Don pointed this case out as well. The argument for like a higher trading range, for example, would be if ETH breaks this resistance, and we sort of consolidate here for the next whatever period between 1.8 to 2.5K. And that might seem like a really attractive proposition, but that would be, for example, one of the spots where you'd get volatility purgatory, right? And even if the prices are nicer, the trading might be worse in that case. And for BTC, in terms of catching up, what would that look like on a chart? I mean, we'll take anything, really. We'll take anything, because this hasn't really done much from a structural point of view. I think at the very least, its equivalent level of resistance is at around 30K. So if we manage to carve something between 30K and some sort of higher low structure in the 20s, that will be awesome as well.
I think it's pretty pathetic if Bitcoin can't do that. Like, we've seen many times where it does this kind of consolidation and then just chads out of it, right?
Yes.
And Bitcoin really needs that. Like, if you're some Bitcoin whale with cash on the sidelines, like, step up here,
Yeah, do your job. I mean, look at this. Like, what are we doing here?
Right? Yeah, it's pathetic. Like, it's just like infinite willingness to sell. Like the most measly of 20K.
I've got a thesis for that. I think I've seen a lot of similar commentary and a lot of these trades put on that for a lot of the participants who are de-risking their ETH positions, they're selling BTC to take profit. and kind of pushing down the pair as a result. So that's sort of why you're seeing this relationship of Bitcoin weakness, not just because it's Bitcoin being weak, but it's because the ETH profit taking is being expressed via selling BTC.
Do you want to talk about ETH BTC? It is sitting there right at that 0.08 resistance, which last time it broke above it, everybody got extremely excited for the flippening and whatnot. And you're going to go to a 3-month chart on me?
I mean, you know, here we go. Here's
bullish engulfing, let's go. Send it to the moon.
Resistance, it's going to 0.
I like our different interpretations of the same thing there.
Yes, I know. That's what makes a market, right? I think Don had this.
Yeah.
Let me do some wizardry here. I think he had it going all the way back to this kind of range high. Maybe it was this, whatever. Could have been this week, however you look at this type of structure. ETH BTC hasn't broken out yet, right? So it failed to break down here, which is good. And I remember Don was screaming about that setup at the time, but it hasn't broken out of the range yet either. And I think regardless of what time frame you look at it, it's very much in that type of consolidation zone. And that's why I think you've seen, at least on Twitter, hasn't really shown up on the chart fully yet, but a lot of profit taking on this pair, because you essentially have ETH/USD hit high time frame resistance. You're getting some narrative saturation, and then ETH BTC is pretty much at the range extremity as well. So, you know, that's your formula for profit taking.
If we do see further upside, it seems like the 2,500, 25K thing is like almost certain to me. That's your push to 0.1 on ETH BTC, and 2,500 ETH was the level we talked about. 2,500 BTC would surprise no one because it's just continued. Like
it's a stable coin, yeah.
Yeah, it's like cross country skiing uphill.
I mean, that's what the 618 is, Ledger. If we're going to talk about macro high time frame 618 type of things, you know, push through 2K for some sort of final leg, and then hit that 2.5, 2.6 resistance. I mean, look, I can just about understand if your argument is, I'm not going to de-risk 2K. I know it's resistance, but I think there's still more juice in this puppy. The merge is sufficiently far away. There's still space on the S&P and NASDAQ before they hit high time frame resistance. This has got another leg. I'd say, okay, like at a stretch, I can understand that, right? If you express similar views, or you don't take profit at 2,600, I think that's very hard to defend. Even from just like a purely mindless, brainless TA market structure point of view, this is like peak lower high territory, right? Like if this entire move down is the lower low, like where is the lower high at a push? It's 2,600 as an extremity, right?
Yeah.
And you would assume it would continue in like a vertical fashion. You'd get like 1, 2, 3, 4, 5, 6. What, like do you want like 10 green candles in a row? And that's not going to make you take profit. Like,
I really want that level. But you're hinting, this is an old cred wisdom of the evolving R, right? Like the closer it gets to your actual target, the less justifiable your trade is.
Yes, like not managing the position at all when it, you know, as it gets closer and closer to your target, for sure. Especially if it starts to slow down, stall, or whatever else. Like I don't know, like even if, for example, this weekly starts to look really shit, like the one we've got right now, people are going to look on the weekly time frame. It's like, where do you rebid this thing from a support point of view, right? Like it's not entirely clear to me where that level would be, because if you're looking in terms of recency, we didn't build shit on the way up here, and structurally we didn't reclaim anything too crazy where you could say, oh look, it should have been support, wasn't, should have been resistance, wasn't, now it's a good level. I mean, what, I can start coping and say what, maybe 1,600 or something like that.
I was about to say 1,700, 1,750 if you wanted to get aggressive.
Yeah, exactly. This kind of messy consolidation here, but it's not entirely clear to me. My eye, at least, is naturally drawn to the pre-breakout range, right?
See, I think you could buy that 1,700-ish range if it happens fast, right?
Yes.
Like
if it's a flash crash, you do something like that, right?
People get stopped out. There's some kind of news or like something, you know, some number comes out.
The merge is delayed.
Yeah. Oh no, that's 1,300. Yeah. But like some kind of macro number comes out that then the market reacts to and then shakes off. And I could imagine a quick thing like that, which is going to stop out some of these people that were in their profitable trade and then be like, damn, I just gave back a week's worth of profit or whatever. And then that ends up being kind of a localized bottom that gives you the momentum to get up to that next target in the 2,500 range. That seems like a really high potential outcome to me, mostly because I know I would want to be out. Like I don't want to give up the last several weeks because it was multiple months of absolute pain. And I finally like caught the legs that I wanted and got a lot of this upside off the bottom. And I don't want to lose it now. So I can't, my mentality and can't be too different from others that are actively in the market. And all of us are potential sellers. So these charts just show up that psychology. That's just the psychology that becomes visualized. And using myself as that persona, I do think that the potential for rapid selling as soon as we get one of these types of headlines could create a buying moment as some of those like skittish longs decide to exit.
Yeah, I think that's very fair. And also narratively, one of the arguments I've seen to support the whole hated rally thing is that ETH perp funding has been like consistently negative or gone through negative
That's
periods.
Great news. Is it still that way?
Well, the thing is, unfortunately, that's not a compelling argument because those are merge hedges, right?
Oh, yeah.
They have to be. Like structurally, they have to be. So it's
still not bad news, though.
It's not bad news, but I'm saying like those aren't the types of market participants who would get blown out by eating shit on funding, therefore pushing the price higher. These are
it's probably somebody with like 100,000 ETH of collateral.
Correct. So typically, those kind of funding price divergences are really good when directional gamblers are offside and doubling down, and they get squeezed by the market in the opposite direction. That's really good. That's where you get your Jesus candle stuff like that, where they get completely blown out. I think in this case, using that specific data point to support the argument of a hated rally isn't compelling because I think there's a much higher likelihood that those are merge hedgers more so than directional bettors who are just like doubling down and getting squeezed. Like it's still good, but I just don't think it's as good as kind of other points in market structure.
We've talked about price a good bit. Should we talk about the New Yorker? It's kind of incredible.
Oh, this article. Oh, it's unbelievable, isn't it?
It is. I'll try to pull it up, but man, oh man, have you seen? Have you read it at all?
I scrolled through it. I've certainly seen the highlights of it.
Yeah. So the
flattering photo, or a bit of artwork, I should say.
Yeah. I don't know how to take this off. You're reaching your article limit. It's the first time I've ever opened this dadgum website. So I guess the only reason to pull this up is one, we kind of talked about price. We're at resistance. Congrats. Good job. But two, I think it's interesting seeing these stories hitting mainstream media. And there's also, you're seeing some of the hubris, and also desperation being expressed in this article in pretty new ways. This is written by Jen Weisner. I think that's how you pronounce their name. And, it talks about the boat and stuff, but I think what's also interesting is that they apparently towards the end, as I believe according to a source that was working inside the company in some capacity, like they were starting to take loans. They got desperate enough that they were starting to take loans from potentially sketchy sources as well.
Criminals. That's the claim, right?
Yeah, that's the claim. So I don't know. Did you find anything interesting, or was it just kind of overall entertaining?
Entertaining, sad, because the fallout has cost our industry a lot. A lot of people who thought they were their friends or reputable counterparties or whatever else were burned.
I think that's what's incredible. Like they didn't leave anybody. Like
no one was safe.
Yeah.
I met with Kyle when I was in Singapore.
Yeah, I remember you mentioned it.
Yeah, so I was in Singapore from the kind of end of April to early May. You can put that on a chart. And we were chatting, and I talked to him about the market, right? And about because at that point macro was like on people's minds. I think price was at around, I mean, what must it have been? Around like what, 30, 40K, like 40 mid to high 30s, 40K or thereabouts. And yeah, I think it was like mid 30s. And I'd spoken to him about, positioning and stuff like that. And he said they'd started buying at 45. And then by the time I spoke to him, when I think the market was like just under 40 or something, he expressed that they were quite heftily deployed in the market at that time. And it was interesting because I asked him for like his thesis or what, why in particular now he had that type of conviction. I was 50 IQing it. I was like, we're not at monthly support, so I can't even buy this if I want to, right? And then I asked for his thesis, and then I think it was some version of the Fed isn't going to keep hiking. The correlation is going to break. And when it breaks, it's going to turn into a momentum trade. And so we're getting into the trade before it turns into a momentum trade or some version like that, which I didn't find terribly compelling, to be honest with you. And it just seems like it's just crazy how, the move that ultimately wiped them out completely was Bitcoin moving from 30K to 20K. That was the kind of nail in the coffin. A lot of their leveraged ARB plays got completely blown out with, Steve. And they got hurt by Luna and everything else, but the
ARB trades.
Yes, the ARB trades. But I don't know. It just goes to show that the so-called smart operators in the space end up becoming kind of too big for their own good, and not having even like really basic risk management. Like, okay, what if Bitcoin goes back to 2017 levels?
What's incredible is like they were bearish close to the top. They just got bullish way too soon.
Yes.
Like I don't know if I can. Yeah. So it's almost like they were like, diagonal good.
Kyle was literally drawing diagonal. Do you remember when Kyle was tweeting diagonal? You and I spoke about this.
Yeah.
He was legit tweeting out TA, and that was so scary because I was like, why is Kyle tweeting TA? Is that really the kind of long thesis for the market at this point? I don't know. I just think, like, zooming out, this has been a very sad cycle for crypto because it hurt a lot of savers, right? That's shitty. Like, if speculators get burned, I don't really give a shit because you kind of know what you're signing up for, right? And you take that risk for the upside. But if you think about Celsius, if you think about Luna, specifically UST, a lot of the people who were hurt this time around were kind of generally kind of risk-off participants on the more conservative side of the spectrum, right? They're not trading on leverage. They're not necessarily gambling. They're not making directional bets. They're just like holders who thought they had their money in some, the Voyagers, another example, who thought they had money in some sort of proto bank and would earn yield on their crypto or earn yield on their dollars to fight inflation or whatever it may be. And that, that's a completely different moral landscape to speculators getting punished. When you punish savers, that's, I think the reputational risk that's associated with crypto following all these high profile fallouts is really rough. And the regulatory zeal that you get as a result of ordinary risk off people getting hurt, it's much easier to push through stuff you may want to push through, right? As we've seen recently.
I think also I certainly did. I mean, we hosted them both on Up Only, and Up Only has been the source for some of these articles and more in terms of information to people. But we were not the only people that gave them a platform, and obviously they were highly regarded in terms of the venture space and as traders and whatnot. So it's not unusual to give them a platform, but it's incredible to then realize like they failed at just being adults with their business and with their platform. And I just am kind of stunned. Not only that, then to your point, the degree to which they apparently like stole from friends and others or borrowed from, assuming they could make it all back. And their actions were so similar to like the most degenerate of like inexperienced individuals, but with billions of dollars at stake. It's pretty stunning. And the degree to which people are using like Up Only and other sources where they spoke to understand what's going on is kind of astounding. Like I got a call from like a federal agency.
Oh no!
Like, on the way home from the beach, and they were like, "Hey, so we listened to your podcast with Suzu and Kyle Davies, and we were wondering if you could help us fill in some blanks because we're like trying to wrap our head around this." And I'm like, "What? Like you're using YouTube as your source of investigative information?"
Feds listen to Up Only, confirmed.
Yeah, I'm like in the car with my family and trying to answer questions. It's like unbelievable. But anyway,
the whole thing is shocking. The fallout is unbelievable, and it's just very sad. When you and I, even on the way up, spoke about surviving, I never thought it would be such a broad term It's like you keep your money on an exchange, you didn't survive, if you chose the wrong exchange. Or if you were a counterparty to like one of the biggest hedge funds and lent the money, you didn't survive. All the protocols getting hacked, like even just sticking around has been so tricky, price action aside,
Yeah. And like if they took their own advice, if you will, like their own, they like put me in a coma, bring me back in 5 years, do everything but get just survive.
Manage your risk, or the market will manage it for you. That's timeless.
A few more liquidations than up only. Like unbelievable.
I know, prophetic, isn't it?
Unbelievable.
It is,
and
unbelievable.
But it is sad. Like at the end of the day, when you get down to it, the role that they play, they're not alone. Like I put Duquan and the Terra situation and there's a documentary, I guess, or like
that's so mad to me. Like
an interview mentory.
Like seriously, Duquan's chilling in I think he's in Singapore or something, right? He's chilling in Singapore, giving interviews. He might be in South Korea, I'm not sure.
Yeah.
But he's like chilling, giving interviews, doing crypto media, despite the whole Terra Luna blow up, while some Tornado Cash dev gets arrested.
Yeah.
Like
over code.
Like to me, the contrast is just so unbelievable.
It is. It's pretty stunning.
This industry is weird, Ledger.
Yeah, I'm kind of disappointed at like where the crackdown or where the attention has gone in crypto, and then you see who's, if you will, like getting away with it. But nevertheless, that's where we are. There's a lot of interesting news, and we knew this was going to happen, right? Like the uncovering of the fallout, like as you start to pull the rubble away and find the stories, like there's going to be much more of it.
Books, movies, the whole thing. Insider accounts, discovery from a lot of these further discovery from a lot of these bankruptcy processes and liquidations and whatever else. Testimony, it's going to get spicy, I think.
Meanwhile, the rest of us are just trying to like sell our coins to each other because there's no new
no new inflows. No, absolutely not.
No new money coming in. So
it's PvP, purely PvP.
Yeah, and dog eats dog at that. Like whoever wins. So that the narratives have to be strong. You have to play those flows and take your profits. Like I don't know a better way around it. And if you're looking for upside, then you play that game. If you're not, then you stay on the sidelines. So honestly, I'm in a place where I'm trying to figure out like what do I want to do for the next step. I really do love that 2,500 number. I just don't know if I'll be able to stomach it. I'm gonna try. Find out next week. And that's all I have. I don't know if you want to close us out with anything, Cred.
Gosh, nothing in particular. I mean, shout out to Don. Hope you're enjoying your holiday. Bought the bottom, got a nice girlfriend, sends me cute pictures of them like surfing and stuff. It's unbelievable what this man's gotten away with. Meanwhile, we're here PvPing each other. Like I'm about to go lift some of your offers in the order book, like as soon as the stream is over, It's crazy how that works. As far as rounding stuff up, I think it's just what we started with, really. Keep an eye on ETH. 2K, especially as an area of resistance and whatnot. Keep an eye on risk indices over the next couple of weeks, because if they start moving, I think it's very, very likely we'll follow through. If you get strength through 2K or you get a ledger flash crash scenario that gets bid up aggressively, etc. If 2K is like medium to high conviction resistance / you'd feel like an idiot if it reversed and you did nothing, took nothing off, then 2.5K is that level on crack to some extent, at least for me, when it comes to market structure or whatever else. And I guess just open eyes, open ears, because that's the type of environment we're in. Sentiment can completely flip on a single high time frame candle, from up only, merge, everyone sidelined, to oh my god, lower high, dead cat bounce, macro is bad, we all fell for it, you bought the bear market rally. It's going to turn on an absolute dime, and it's going to take one candle to do that. So manage your own risk before you let the narratives manage it for you, I think.
Yep. Good luck. We all need it. Thanks for being here. Appreciate everybody listening, watching, all that. Give the video thumbs up and likes and all that. Share this podcast. We need to get it out there into the world a bit more, and we appreciate your help in doing that. Go to weeklyopen.com to check out episodes. Go to weeklyopen.com/FTX. Go actually do that. Go to weeklyopen.com/FTX. Use it if you're not using it already. You can trade, whether you're American, outside of the U.S. They have different platforms for everybody, different products for everybody. They even got stocks these days. weeklyopen.com/FTX. Thanks so much. We'll catch you next time. Bye-bye.